The job of every financial advisor should always be to look what is best for you, trying to maximize your return in time with the appropriate level of risk for you. But what happens when you feel that your advisor is not giving you what is best for you, but maybe he's trying to give you what is best for him? In this video, we are going to share the 5 tips to know that maybe is the time to fire your advisor. First tip, let's just think for a while that your advisor comes to you and says, the stock market is coming up and down, and maybe this is not something so good for you. I have this wonderful insurance and financial product that is called annuity, and it's going to give you a guaranteed return no matter what happened in the stock market. And he will say, you know what is the best thing about this? It's going to be no cost for you. There are no commissions, no fees. I will always tell you that in any investments, you have two different kind of laws that are always there. The first one, the higher the return, the higher the risk. And the second one is there is no free lunch. Always someone is going to pay for the cost of the insurance product or the investment product. So you will have to always ask to your advisor to tell you, first of everything, how much are you earning, or what is the commission, the bonus that you're getting for selling me these products, for you to know if your advisor is maybe not acting as a fiduciary to offer you what is best for you, or maybe he's just offering what is best for his wallet. And the second one is, what happens if I need my money in time? Are there any surrender charges? Are any withdrawal fees? Can I get my money when I want it? And if there is a fee, how much is that fee? And also ask him if there are any other kind of commissions that you will get there. As you can see, I'm not just saying like any annuities are bad. What I'm saying here is that you should always know how much you're paying for these different insurance products that you are getting here. The second tip, your advisor is telling you that the time has come for you to buy a life insurance. But not just a life insurance, but a life insurance that it is also help you to save in time and to invest your money in time with a guaranteed interest or rate. And they are usually called like index universal life insurance or a whole life insurance. The first question that you should ask yourself is, do I really need a life insurance? Are some people or family are financially dependent on me? If you don't have anyone that is dependent on you, you don't need a life insurance in most of the cases. And if you do, maybe in almost 99% of the cases, it will be better for you to buy a life term insurance, which are going to give you a bigger coverage and are really cheap. And more if you compare it with this whole life or universal life insurance. So why in most of the cases your advisor is offering you this? Because he's getting a great commission or a great bonus when he's going to sell you this kind of product. But again, you have to ask this advisor, and you always have to ask, how much are they're paying you to sell me this insurance? Second, what happens if I need my money and I need to withdraw my money? What are the surrender charges or any withdrawal fees that I'm going to be exposed there? And the third one is going to be, are there any other kind of fees in your investments? Because usually they are going to tell you that you're going to receive a great value and great return in your cash value, the money that you're investing there. But when you take the numbers and you withdraw, you subtract all these commissions and these fees, in most of the cases the returns are not good at all. And mostly, if you want to take your money in the first year, the amount of money that you're going to go get is really low. You usually don't receive a call from your advisor. He never writes an email to you, and he only writes to you when he wants to sell you any kind of a financial product, or maybe when you're contributing more money to your portfolio. you have to be really careful with this because most of the time, and it happens mainly in the big financial groups, these advisors are more like salespeople, or they are going to try to sell you. What is in fashion in these days? I don't know if it was in the wartime, they're going to try to sell you like any kind of investment that goes with the army and with weapons and things like that. Or if it's in COVID time, maybe something that is related with the medicine and vaccines and things like that. Or maybe in these days, with all the artificial intelligence and technology, they're going to try to sell you something like that. Remember that a portfolio has always to have a goal. I mean, the portfolio is there to reach something that you want to accomplish. It's a tool for you. And first, you have to know what is your investor profile. And after that, it's like at what speed your car should be going. After that, you build a portfolio that is going to take you there. But the way that you build that portfolio is like having a cookie recipe. When you're gonna bake some cookies, you're gonna need like 1 cup of flour and a little spoon of salt. But you know the ingredients that your portfolio is going to need. You don't want an advisor that is going to be suggesting different kind of ingredients that maybe are going to be really good for his bonus, but not so good for your portfolio. And when you see your portfolio, you don't have a recipe there. You just have the things that the advisor is trying to sell you because it's good for his financial group. Fourth tip, maybe your financial advisor is charging you a really high commission for managing your portfolio. And for you to know what is a high commission, let's just review what is the standard average commission for managing assets here in the US. If you have a regular portfolio, most of the advisors will be charging you like 1%. So let's see this example. Just think that you're an investor, you have $500,000, and then you hire this advisor, and the advisor is telling you, I'm going to charge you 1.5%, which is above the average. And he will say like, well, each year you can know that he will be charging you like $7,500 per year. And if he's managing your money for over 20 years, and maybe he's making for you a return of, just for educational purpose, like a 6% return for those 20 years. After those 20 years, the fees that this advisor has collected from you will be around of $275,000. So it's a big commission, and you should get a real good service there. And we can take the quote of Warren Buffett that says like, price is what you pay, but value is what you get. So I will say if you have a portfolio like this and he's charging you over the average, you should be also getting a service that will go over the average. What I mean is like you should be getting some financial planning service here. That includes some tax planning, cash flow management to see how you're doing with your monthly expenses and things like that. Estate planning also help you to see if to help you with all your different goals, to see if you're gonna reach your goals, you're gonna reach your retirement, and help you with different strategies to reach them. If you're paying more than 1% just for managing your assets, maybe you're paying too much. And the fifth tip that we can give you is like, what happens if your advisor is not answering on time your different requests, or maybe you feel that he doesn't know how to explain to you in an easy way where your money is invested? Remember, this money belongs to you. You hire a professional to help you to manage your assets. So you have the right for him to ask him different questions or make him different financial requests, and to get a prompt answer to your different requests. But also, part of our job as a financial advisor is to be able not just to try to explain a financial product in a really difficult way that maybe sounds really fancy, but you're not getting what we are saying. Our job is to see how I can make that easy enough for you to understand, because this is my job. I'm a specialist in this area, so I have to know how to make it easy for you to understand where your money is invested. And you will say that if you're not Elon Musk or something like that, most of the investments that are available for you will be easy to, to explain and to show you where your money is invested. Each time an advisor is giving you like this special kind of investment that maybe you will never understand where your money is, it's because maybe he's charging you a really high commission, or maybe that kind of investment is not the right kind of investment for you, because if the advisor cannot explain you really easy where your money is, maybe it's not the best investment for you. So if you like this video, or maybe the video was helpful for you, please give it a like. And also, if you believe that you have your advisor and maybe you feel that you need a second opinion, or maybe just a portfolio overview, at Advice Financial we provide hourly financial planning and we can help you with that. Thank you.